to the Ichimoku.co daily futures market review for the trading day ending Tuesday, December 2nd. Firstly to gold futures, and here we see the return of a black body candle for today's trading. The buyers are unable to sustain price activity up above the round number 1200, and the sellers coming in and breaching that 1200 level in a moderately bearish manner. We've seen the sellers take control away from the buyers for today's trading. Possibility of the market trading down to the 1185 region, and just below there we have potentially very strong support around the Tenkan-sen and Kijun-sen, trading roughly around the 1181 to 1182 region. This new candle, as it trades, is currently finding some resistance at the 1200 round number level, and may have some difficulty in penetrating through there. If we do see the market test up through there in a bullish manner, we could once again see the market trading to the 1218 level, only to perhaps find resistance around that area again. Now, we still do have a bearish market in the longer term time frame by trading below the Ichimoku cloud, but maintaining a bearish activity up above the Kijun-sen and the Tenkan-sen, and if the market does continue to come off, that will be the area that we do need to watch very closely, around that 1181, 1182 region. Now, just looking at our bands here with the with gold futures, and here we saw the market for the previous day finding support down below the lower band, buyers closing in a strongly bullish manner up above the upper band, suggesting that we have potentially a very strong bullish bias in this market, but we didn't see the follow through that I like to see. We saw the sellers coming back into the market to close the market within the bands. Now, this doesn't suggest that we may not see further development of the trend to the upside. A lot will depend on how the market reacts to this upper band if we do trade up there. That's around the 1202 region, but obviously just above the round number 1200, and it may be difficult for the buyers to breach that area today. Moving next to NYMEX oil, and here we see development of a black body following the strong white body candle, with the buyers taking control for that day's trading. There was very solid potential for a change of trend to the upside today, with the swing in momentum away from the sellers and control away from the sellers to the buyers, but the buyers weren't strong enough to breach the 69.50 level of resistance for that candle. And for today's market, we've traded just to that level and been rejected from there, with the sellers taking control with this candle and finding some downside momentum once again. Now, the sellers, however, did find support at the 67.15 level, so not a good market to be trading until we breach one of these levels, and to be in line with the trend in the longer, medium and fast term timeframes being bearish. A close down below the 67.15 level and below 65.05 certainly could see the market trading down to around the $60.68 level quite quickly. Just looking at the bands here, and here we see continued price activity down below the lower band, highlighting the very strong negative bias in this market. Any rally that we might see over the next day or so should find some strong resistance at the bottom band at $70.17. Next to wheat futures, and here we have a very firmly established second time frame and first time frame uptrend at the moment in this market in wheat futures. The buyers previously showed very strong commitment to taking this market higher. We had these two very large white body candles bouncing off the 557.50 level of support, breaching a couple of important areas of resistance, and importantly the 600 round number level of resistance, with the market trading well up above each of the Ichimoku indicators, highlighting the strength of the buyers in this market now. So very dynamic trending market, the wheat futures market, and here, as a trader, we'll be waiting for a pullback and looking for the buyers to come back into the market for the trend to continue back on its way. Now, at the moment, for the current candle that's finished trading today, we've seen an indecisive spinning top type candle, suggests a possibility of a change of trend. And what it suggests is that the strength of the buyers, the momentum they had, the control that they had by closing up towards the high, is no longer in the market. And by the same token, the sellers don't have any strength here. They've closed around the midpoint level, and a lot of indecision in this market. But it certainly does suggest that we've seen a weakening of the strength of the buyers. Now, the thing is, when we look at how dynamic this trend has been, certainly in the last couple of days, it's little wonder that we've seen the buyers taking a bit of a rest. And the important thing here will be to watch the 600 round number level to continue continue to act as support, and we saw the area just below there acting as support today, with the market failing to close down below there. So a possibility of the buyers coming back into the market and us not perhaps seeing that change of trend. Now, if we do see the change of trend to the downside, we'll be looking for a lower high and lower low, and we'll be looking to strong support to come in initially at 590, and then we've got even stronger support down around the 575 and to the Tenkan-sen trading at 571.88. And looking at our bands, and here we see very strong uptrending price action. The band's now starting to get very wide, reflecting the volatility now coming into the market that's because of the strong trending move. If the market does come off, looking to the upper band trading at 579 at the moment to act as very, very strong support, and incidentally that coincides with that previous major swing high. Next to corn futures, and here we see a black body candle in the market for today's trading, establishing a new first time frame downtrend. For the previous day's trading, we saw an inside day, and prior to that an outside day, and those two candles suggested that there was a lot of indecision in the market. But whilst we had that indecision in the market, we saw the 385 level holding as strong support for those two candles. For today's trading, we've seen the market breach that area in a very strong bearish manner, building some solid downside momentum, changing the trend to the downside, and suggesting a possibility of further downside in price action. Now, if we do see that, however, there's a very good possibility of strong support coming in at the Tenkan-sen, trading at roughly 378, and then also at the Kijun-sen trading about the 376, 377 level. But we still do have a bullish market in all three timeframes, and looking at the market making a series of higher peaks and higher troughs, we still have a fairly well established second timeframe uptrend. Now, interestingly, with corn futures, with the bands here, we've seen a weakening of the strong uptrend that we had previously in this market, with the market closing in a bearish manner down within the bands. So we no longer have that strong bullish bias. Potential for the market to find support at the middle of the bands at 377.69 if we do see the market continue to sell off. And also with this current candle as it's developing, we'll be watching the upper band very closely at 385.80 to potentially act as resistance. Next to US 30-year bonds, and here we see a fairly large black body candle again. The previous day's trading, we saw the sellers coming into the market trapped within the Ichimoku cloud and bound by the resistance at the top of the cloud and the support at the bottom of the cloud. Now, the sellers have been quite strong today in breaching the bottom of the Ichimoku cloud. They've also breached both the Kijun-sen and the Tenkan-sen, and it certainly does take some strong momentum to do that, and we've seen the breach in a fairly strong bearish manner. Also, we've seen the market breach the 140.106 level in a bearish manner, suggesting good potential for the market to trade down to the 140.14 area. Now, the thing to watch out here for is that whenever we get these breakouts down below a flat part of the cloud, we can get false breakouts, so we need to be very careful with this breakout that we've seen. What I want to see is some strong bearish follow through to confirm that breakout. So at the moment we're not seeing that, and we're seeing some buying coming in. It is early in the trading day, but we'll be watching that 140.106 level to act as resistance, and if the market breaches there, watching the bottom of the cloud now, and the Kijun-sen, Tenkan-sen around 140, 122.23 to act as resistance. But there is an opportunity here for the sellers to follow through with this strong control that they've had for the last 2 days, and a solid bearish close down below 140.14 could quickly see the US 30-year bonds trading down to the 138.30 level. Now, looking at our bands here with the bonds, and here we see the market trading within the bands once again, finding support at the bottom band. So not a lot of direction in this market at the moment, and as this new candle develops, we are seeing support come in at the bottom band again at 140.27. So very, very important trading coming up. Now, we had the false breakout up above the upper band, we had the strong follow through, so one of those times where we didn't see continued development, and it gave us a very bad signal to the upside. So we'll be watching the downside, but I suggest that if we do see the breakout to the downside and the follow through, we'd want to clear this close by support just to be a little bit safer than just taking the indication of the breakout and the follow through by itself. And finally, moving to the S&P 500 hourly charts, the S&P 500 futures, and here for today's trading we saw the market open below the middle pivot point level, opening well down below the Ichimoku cloud. But if you recall yesterday, the previous day's trading, we saw the market testing down to that third pivot point support level, and generally we don't see a lot of follow through once we see that. It tends to be, not always, but it tends to be the extreme, and it's quite an extreme day when we see that, and we tend to see the market either relax or some buying coming into the market. Now what we saw today was the market breach both the Kijun-sen and the Tenkan-sen, showing a great deal of strength halfway through the trading day, only to test just below the those indicators and the middle pivot point level, but then for the buyers to come back into the market very strongly and close the trading session well up above the Ichimoku cloud and each of the indicators. So this downtrending price action in the longer term time frame that we had lasted for no more than probably more than 2 24-hour periods, and perhaps it says something about the continued strength of the buyers in this market, that there still is a possibility of this market continuing to trade to higher levels. Now we've opened up very solidly above each of the Ichimoku indicators and above the middle pivot point level, and there's a possibility of the market trading to the first pivot point resistance level around 2068, so that's an area that we should be watching. But if we do see the market come off, then potentially strong support around the middle pivot point level, which coincides for the first couple of hours or first half dozen hours or so of the new trading session, very close to the top of the cloud, so very solid support around that region.